What's up, everyone? It's Eric with Option Edge, and tonight I'm coming at you with another trade in the SPY, the S&P 500 Spider ETF, and we got another good one for you guys. So what are we looking at? So under a specific trigger, so let's look at the trigger first. So technical open, let's open that up. So basically, anchored volume weighted average price when the stock is below, or rather when the 10-day anchor volume weighted average price is above the stock. That's the trigger. Just that's the trigger. And so this is 1 year returns. Okay, let's look at 10-year returns now, or let's go 5, 10, and then we'll look at the 2007 2009 financial crisis period. So let me pause this because it's got to load. And before I pause this, if you haven't watched any of my videos before, this is what I'm using here is a backtesting software. It's called Trade Machine Pro by CML Viz. It's pretty good stuff. So here comes the back test. Here comes the results. So as you can see, that all these different combinations of selling a put credit spread have been a winner. Okay, and it's a matter of which one has the better return. So let's look at 10 years now. I'll pause it, let it load. All right, and here's the 10-year returns, and you can see which looks like the 35-30 put credit spread is the winner of the different strategies here. And let's look at one last back test. Let's look at the financial crisis of from 2007 to 2009, see how each strategy fared. So, all right, so you can see this strategy worked out. So did this one, even in what was considered a pretty nasty bear market. So with that said, and then also another parameter for this trade is we are we're closing out at a 50% gain with no limits for losses. Okay, so let's go ahead and let's look at so this is the anchor weighted VWAP here at 10 days. I'll just show you how this is done. So I select the anchor weighted VWAP indicator. So we're going to go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So if I click on this one, you can see we're well below that 10-day VWAP. Okay, looks like the last I don't know, 1, 2, 3, last 4 or 5 days we've been below that, and I've actually opened this trade each day. We've been below the that 10-day VWAP. So with that said, and something to keep in mind, we could roll down, and we most likely will roll over down to this 50-day moving average. You can see last time we didn't quite hit it, but the other times we did. So you can see each time we roll over, we get pretty close to that 50-day moving average. We probably each time looks like we touch almost. I don't know if I have my settings on logarithmic. I do. Okay. So with that said, if we look at the 50-day moving average, let's say if we were to touch this 50-day moving average, that's right below the 442 line price. Let's go ahead and draw. So right around there is, 441.5 to 442 is like right around where that 50-day moving average is. So let's go into the options chain and look at. So I opened this trade today, and I sold the 438. So the 438 strike is below the 50-day moving average. Okay, so that's sort of assuring. And you can see 442 is at the 40 delta, 440, right where the 50-day moving average is at the the 40, 38, 37 delta. And we're on the since if we go to the back test was a 30-day back test. We're on the October 13th option chain or week expiration. So I went ahead and let's redo this. I'm going to go ahead and click on. We are going to sell the 438. Boom, put. And then buy behind that, the 434. So this is the 4 strikes wide. Okay, 4 strikes wide. So our max loss is going to be 4 minus the credit received, so that we're receiving 78. So our max loss should be 321. Okay, should be more like 322. I'm not sure. Anyway, that could be anyway. So we're risking a lot to make a little, but with how the S&P 500 basically just rolls over, and when it does roll over, eventually it just goes up, and as you can see, it's always going up for the most part. We've been in a massive bull cycle, and I don't see any reason why that's going to change anytime soon. So that's the trade in a nutshell. Max profit is $79, but of course the parameters that we're using is we're using a 50% close if we're above 50% gains. So that's something to keep your eye on. And yeah, that's what we got. All right. So if you like this stuff, please like and subscribe, and go ahead and follow me on Twitter. I put my name in my bio. So go ahead and give me a follow if you want to see live trade updates real time during the day. And as always, this is not financial advice. All righty. Peace out and have a good one. Bye.